And the third one is the so-called statement of cash flows, which presents the increases as well as the decreases of cash or cash inflows or cash outflows. And these are generally presented under three categories, namely cash provided by operations, cash provided by investment operations, and cash provided by finance operations. The cash flow statement also presents the balance of cash at the beginning of the period as well as the balance of cash at the end of the period. The notes to financial statements are in effect supplementary information to the balance sheet, income statement, and cash flow statements. These notes to financial statements present information usually in narrative form that are not otherwise comprehended under the first three types of financial statements, or the balance sheet, income statement, and cash flow statement. The notes to financial statements also present the accounting principles used by the CEC or business enterprise in the preparation of its financial statements, the details of certain accounts that are presented in the condensed balance sheet and income statement of the CEC. Supplementary schedules also include, in certain instances, financial ratios or analysis based on the basic financial statements, namely the balance sheet and income statement. The financial statements and reports of the CEC are supposed to be submitted not only to the management of the CEC, not only to its officers and employees, but also to other entities or to other parties outside the CEC, like in the case of LGU-CECs, the other offices within the LGU or local government, such as the accounting, budget, or office of the mayor or office of the governor. In some instances, these financial statements are also being requested by other government agencies like the Bureau of Internal Revenue or the CEC is registered with the Cooperative Development Authority by the CDA. The financial statements and reports of CECs, if they are submitted to disinterested parties or independent parties or parties outside the CEC, they should be subjected to, or they are usually subjected to audit by independent certified public accountants. And independent certified public accountants, on the basis of the financial statements and reports submitted by the business enterprise or CEC, undertakes an audit in accordance with general accepted auditing standards. And the audit may involve test of transactions, substantiation of transactions, calculations, vouching or checking of supporting documents, checking of computations, and evaluation of internal control to a certain extent necessary for the independent CPA to form an opinion as to the fairness of presentation of the financial statements of the business enterprise or the CEC. The the auditor's report usually includes not only the financial statements or reports of the CEC, but also a statement of the management of its responsibility over the financial statements. And this is usually embodied in the so-called statement of management management responsibility. The statement of management responsibility generally state a representation of the management that it is responsible for all information and representations contained in the financial statements for the period covered by the same. The end of the financial statements have been prepared in conformity with generally accepted accounting principles and reflect amounts that are based on the best estimates and informed judgment of management with an appropriate consideration to materiality. It also represents that the CEC maintains an accounting system, a reporting system that provide for the necessary internal controls to ensure that transactions are properly authorized and recorded, that the assets are safeguarded against unauthorized use or disposition, and that liabilities are recognized. The board of directors or the steering committee or the core group of the CEC review the financial statements before such statements are approved and submitted to other entities or parties. And it also states in its statement that the management has engaged the services of an independent CPA for the purpose of examining the financial statements in accordance with generally accepted auditing standards, and that this CPA has expressed his opinion or her opinion on the fairness of presentation upon completion of his or her audit. The uh, the auditor's report or the package of independent auditor's report also includes a statement of representation. And this statement of representation is issued by the independent CPA himself. He or she states that the financial statements covered in his audit or an audit were prepared and presented in conformity with the generally accepted accounting principles, that he or she has adhered to the standards of auditing or generally accepted auditing standards, that he or she is qualified to provide such service as certified public accountant in accordance with the Code of Professional Ethics for CPAs, and that he is also fully aware of his responsibility as an independent auditor, and that makes she makes the representation either in his individual capacity or as a partner of an auditing firm, and that she or he is a member in good standing of the Philippine Institute of Certified Public Accountant. The the report package of the Independent Certified Public Accountant also includes the so-called Independent Auditor's Report or simply Audit Report, and it usually contains, and because this is required or prescribed under general accepted auditing standards, uh, it contains basically 5 paragraphs, and it is addressed to the board of directors of the business enterprise of the CEC. It states there the management responsibility for the financial statements, the financial statements audited by him as an independent CPA, his responsibility as a CPA, the conduct of his audit, and his opinion. The preparation of financial statements of business enterprises or even not-for-profit enterprises like CECs, as mentioned earlier, should be based on a chart of accounts, and a chart of account of a CEC might be similar to this one. But basically, it should have account titles for assets, for liabilities, and equity. If the CEC is a corporation, under the equity there should be other account titles like common stock, preferred stock, retained earnings, donations, etc. But in the case of LGU-based CECs, the equity is simply stated as or the residual account between assets and liabilities is simply stated as equity. The the number of account titles that may be included in the chart of accounts of a CEC may vary from CEC to CEC. For instance, in the case of cash, it may include cash on hand, cash in bank, petty cash fund, or uh, the CEC might opt to include also revolving fund or payroll fund, etc. And for receivables, it may include also, or it may expand further the inventory account title, say raw materials, work in process, and finished goods. Well, if the CEC is involved or engaged in manufacturing, but since most CECs are only engaged in, say, buy and sell of ICT goods, this account title would suffice inventory. The property, plant, and equipment may include other accounts like transportation equipment if the CEC has, say, a motorcycle or a vehicle that is used for or used in its operations. The investment could be short-term or long-term. It is short-term if it is convertible or it will be converted into cash within a period of 1 year after the balance sheet date, or it is long-term if it is convertible or intended to be converted beyond 1 year. And all other assets that do not fall under 100, 110, and 120 or 130 are included as part of 150 or other assets. The same is true in the case of liabilities. Current liabilities may include other accounts aside from accounts payable, loss payable, accrued expenses, and other current liabilities. Current liabilities may include short-term portion of long-term debts or liabilities. The chart of accounts is actually a guide for the bookkeeper or accountant in journalizing business transactions of the CEC or telecenter. And for the income statement chart of accounts, the same. The account titles may be more than this ones presented on this slide. For example, for the revenues, we may include here interest income or income from deposits. Okay. And for the expenses, some other types of expenses may be included, depending on the types of transactions that that are being consummated or that are being made by the CEC or telecenter. Now, as I discussed a while ago, the books of accounts that may be used by a CEC may take the form of sales register, cash receipts register, purchase register or journal, cash disbursement register or journal, general journal. And for the secondary and final books of accounts, we have the subsidiary ledger and the general ledger. The general ledger is the so-called final book of account because it is here where the transactions and balances are finally posted or recorded.